All right, everyone. Welcome to the C21 Island Life podcast. I'm Carlos G., your host with Live Island Life. This podcast is about showcasing the Florida Keys. Whether you're interested in vacations, relocating, or just plain old love the Florida Keys, this podcast shares with you the daily life and the daily things about the Florida Keys. We get some knowledge as well. We get to do some funny things, but it is about you and it's about this place that we love so much. So hang on, watch our podcast, and welcome to the Florida Keys. Live Island Life.
Hello everybody, this is Carlos G from Live Island Life. Thanks for coming for podcast number 8. Today what I'm going to do is I'm going to give you some access to Sean and Jason from CMG Finance. If you are on the market for a home, you gotta listen to these guys. They have extremely amazing products. The most exciting products that they have, other than your traditional FHA and conventional loans, is that they have these alternative financing programs for you that are a business owner. So cash flow financing, bank financing, just based on financial statements, even no doc loans, which scary enough, they're back. So how did you hear from them? They're both going to talk about different topics, and I hope you enjoy. If you have not subscribed to our channel, just hit the subscribe button. If you're watching YouTube, follow the podcast on Instagram, Live Island Life, and enjoy more information regarding the Florida Keys.
Hey everybody, it's Jason and Sean over at Miami Mortgage Advisors, and we are super excited to be working with C21 Island Life.
We look forward to helping you out from Key Largo all the way to Key West.
And I tell you, we couldn't ask for a better partner in Jimmy Lane and Eric Johnson.
Our office is set up to handle your buyer, whether they're a traditional FHA, conventional, and jumbo loan,
or a portfolio loan. We can handle those as well. We're here to take care of all your mortgage needs, anywhere and anytime.
In today's episode of our quick briefing podcast, I'm going to ask a few questions for Jason and Sean. These are rapid fire questions. So, how you doing, guys? Awesome. Fantastic. All right. Down payment. What's the typical down payment these days for most of the mortgages today?
if you're looking for a smaller purchase price, you can go with an FHA loan and do 3.5 down. There's also some conventional options that'll allow for 3%. And if you're a veteran, you can also get a loan for 0% down. On the bigger properties, more expensive properties, you can look to spend anywhere between 10 to 20% down.
Jason, what's an FHA loan? FHA loan. Come here. Tell the folks, what's an FHA loan?
It's not a first-time home buyer.
It's not necessarily a first-time home buyer product. It just allows for customers that maybe have some bumps in the road or need a lower down payment to be able to purchase a home. They can purchase with as little as 3.5% down. The seller can contribute up to 6% towards their closing cost of prepaids, and it does allow for some bumps on their credit as well.
So it's easier to qualify.
Definitely easier to qualify.
What are the loan limits for FHA?
Depends on what county that you're actually in.
Monroe County.
Monroe County, you're looking at $552,000 for a single family transaction.
And it goes up if you go into a duplex, triplex, or a fourplex.
Yeah.
Can you get an FHA on a vacation home, a second home, investment property?
No, actually, you can only do that on a primary residence, so it has to be on our own property.
Has to be on our own, right? Okay.
But the great thing is it's only 3.5% down.
Okay, cool. Sean, what's the credit score and what's the limits and the minimum limits for anybody to get a loan today?
So your credit score is represented by 3 bureaus, Equifax, TransUnion, and Experian. And what they do is they look at your credit history and how often you pay your bills on time, and also how many different line items you have. They determine a score. Each of their scoring systems is proprietary. If I knew how they worked, we'd all be better off, but I don't. So, one thing to keep in mind is that we can actually go down to credit scores as low as 500. We understand that just because you might have had a bump in the road in your credit history doesn't mean that you don't deserve or are qualified to purchase a home.
Yeah. So you have some bumps in there, maybe missed payments, even bankruptcy. You still could get a loan if you establish some sort of history here, like in the past year.
Okay, so we understand that bad things happen to good people, and a lot of times they have other factors that would look more highly or better for them to make up for the fact that they've had that, credit bump.
So during the buying process and the closing process and the lender requirement is the home inspection, right? So how does the home inspection, where does it come in the process of obtaining a loan? Why does the lender require it? How long does it take? And what could go wrong with that?
So that's actually a good and commonly misconception, is that the lender requires an inspection. So the inspection is for peace of mind of the buyer. So that's the buyer going in there and doing their due diligence so there's nothing wrong with the home. Now a lot of times, especially in the Keys, the insurance agents are going to require not only the inspection but a 4-point inspection as well as the wind mitigation. Okay, and as a lender we do require all our properties to have insurance. So that's something to keep in mind, that the inspection is definitely for peace of mind of the buyer. As a lender, we actually never look at the report, but some insurance companies will require that 4-point inspection to write a policy, and the wind mitigation can also lower the policy premium as well.
What's the difference between conventional loans and a FHA loan?
Put it simply, an FHA loan is going to be a little easier to qualify for. You're going to be able to have a higher debt-to-income ratio than on a conventional loan. But with that, the loan limits are going to be a little lower as well. And since it is an insured product, you are going to have mortgage insurance for the life of the loan, which is why if you're going to qualify for a conventional loan, it's generally more beneficial to go with that versus an FHA loan. So we're going to go with FHA loans if we need to, not because we want to.
What are the costs involved with purchasing a home?
Well, I'd like to kind of separate it into two batches. You're going to have your initial upfront costs, and then you're going to have your closing costs. So in the beginning of the transaction, you're going to have your initial deposit. You're going to also pay for an inspection as well as an appraisal. And if you're going to be buying in a condo building, you're also going to most likely be paying for some type of condo questionnaire as well. So the inspection, the appraisal, and the questionnaire should come out to be a little under $1,000, and the initial deposit is really going to depend on the negotiation that your realtor and the seller's realtor has, as well as the price of the product that you're purchasing as well.
Fantastic.
Regarding your down payment funds, just make sure that you're not transferring funds from one account that we not verified into the account that we're using for closing. That's just going to allow for us to have to go back and re-verify funds. Those funds could need to be verified over an extended period of time, and we would need to document any large deposits, which could slow down your closing. So it's important, make sure that when we're doing your application, you're disclosing all your assets that we're going to be using for closing, and you keep them in the same account.
If you're planning on buying a house, even if it's a year out, do not buy a new car, do not buy a boat, don't open up that new credit card, keep those credit cards down. The biggest problem we have with qualifying people that have the down payment is that they have too much debt, especially opening up debt recently right before you're about to purchase the home. It can destroy the loan. I'm Sean McMahon, my phone number is 305-934-69.